What if moving into a world with less data and longer timelines actually made you a sharper finance leader?
Today's guest, Darien Wright, made a move many CFOs wouldn't. After a career spanning public companies, consulting, M&A, and hospitality, he stepped into the nonprofit world as a CFO and COO at the National Geographic Society.
Nonprofits operate differently. A reliance on donor cycles, more ambiguity, and less real-time data than most corporate environments. Darien shares what stuck with him most about the transition and how combining the CFO and COO roles changes how strategy, operation, and finance come together in the executive team.
This episode is all about how nonprofit finance can sharpen decision-making for any CFO in any sector.
This is the Growth-Minded CFO. Let's dive in. Welcome to another episode of the Growth-Minded CFO. I'm Lauren Pearl here with my wonderful co-host, Alex Louisy.
Thank you so much, Lauren. We're so happy to be back in New York City today. It's super cold, but we're just here in the studio for another episode.
It's freezing cold here, but I'm warm here in the studio with you, and it's wonderful to be back in person again. And here with us remotely is Darien Wright. Darien is the CFO of National Geographic. Darien, welcome to the show. We're so excited to have you.
Thank you so much, Lauren and Alex. Great to be here with you.
To kick us off, maybe Darien can give us a quick kind of overview on who you are and what you do.
Sounds good. Well, today I serve as the Chief Financial and Chief Operating Officer at the National Geographic Society. And so what that means essentially is partnering with our CEO, partnering with our senior leadership team and staff, and then partnering with our board to essentially drive the mission of the society. You know, our mission, when you think of National Geographic Society, is to illuminate and protect the wonder of our world. And we do this by using science, exploration, education, and storytelling. And so when you look at my role on an org chart, you know, I work from everyone from, you know, our controller function on the finance side, FP&A, investment portfolio, and then on my other hat, if you will, it's working through with our teams and leaders in strategic operations, technology, as well as our experiences associated with Basecamp, which is our headquarters. We refer to our headquarters as Basecamp. And then finally, I also sit on the board of National Geographic Partners, which is basically our joint venture with Disney.
Nice. Darien, one thing that was just striking to us when we were preparing this episode is the fact that you're working for a nonprofit. And I think we'll talk a lot about this in the episode. But can you tell us a little more about what brought you to that position today and, you know, what did you do before?
Sure. My career now spans over 30 years. So I'm a lot older than I look. I spent the first decade in professional service firms. So kind of Coopers and Lybrand, Accenture, and it was basically all doing accounting, M&A, strategy consulting. The last decade and a half, I moved into hospitality, and I split my time between Marriott for almost 12 years, and then did some work for the private equity firm Brookfield, based in New York. And so in between those two chapters, I spent some time with Sprint Nextel. If you know them now, they're known as T-Mobile. But that gave me my first introduction, if you will, to being a finance business partner working for a publicly traded company. And so that was kind of wedged in the middle there. And then if you fast forward to where we are today, I am coming up on my 2-year anniversary with the society next month.
Wow. So you made a transition for a couple of different industries. You've had sort of a few stops along the way along this 30-year career. Give us a little glimpse into the decision to do nonprofit. You had a lot of context in other industries and other functions. What was that decision like to move into nonprofit, and what factors were you considering moving into it?
Yes, it's a good question, right? Because, you know, up until that point, I considered myself a hospitality guy. And so when it came to, you know, rewind the clock 2-3 years ago, this idea of, well, what's the next opportunity? Nonprofit was not on my list. But having said that, I had served as an independent board director for 2 independent schools here in the DC area. Today, I serve as a board director for 2 other nonprofits. And so when I received the call, it was this idea of like, wow, would you like to do nonprofit as your day-to-day job now, just not on the board side of the table, right? And so when I learned of the company, it was, okay, well, I've got a mission-driven organization, strong CEO. The yellow border is one of the most trusted brands globally. And then we have a talented team that works with our explorers. And so from that perspective, it says, well, how could you not take a look at this opportunity?
And when you joined this organization, like, what is the first thing that you noticed that is so much different from working in an organization that is more like for profit?
Yes. I tell folks, one of the biggest ones, biggest changes, if you will, was just getting used to the revenue cadence. So if you think about hospitality, you'll come in the morning, you pull up a flash report, and you can see how your 100 hotels in the region did in terms of occupancy, revenue, all what happened last night. And in the nonprofit world, we are heavily reliant on contributions, right? And so you may have a steady stream of contributions that take place from part of your annual giving efforts. But when you think about the sizable gifts, that's very lumpy. And so, and a lot of times when they do come in, you may not get 100% of the gift in 1 year. It may be stretched out over 3 to 5 years. So, getting used to that, if you will, and just this idea of a culture of philanthropy was really a big shift for me, just from a mindset standpoint. We have an amazing team on the advancement side, and in 2025, we are coming off of a historic year in terms of fundraising, right? So that was, I would say surprise number 1. But then I think also pleasantly surprised is coming from kind of publicly traded entities, private equity, we don't look at a stock price on the wall every 5 minutes, right? As an example. When it comes to capital allocation decisions, we are not focused on, well, how many shares can we buy back this quarter, as an example, right? So this, now you have to kind of shift your mindset and say, hey, the mission comes first. It's a mindset mission, right? And with the mindset mission, are we having impact? And then all of your decisions kind of filter from there.
When you're in a CFO position, you're always trying to kind of evaluate ROI, right? Return on investment. This is sort of our mantra in the position. When you're running a nonprofit, how are you measuring that impact? Did you have to kind of make those decisions on your own of how you would measure this impact? Was that sort of already in place? Tell us a little more about how you make that, how you measure that as a CFO.
Yeah, it's interesting, right? Because, I alluded to earlier this idea around the mission mindset. And I think so many times folks realize or they have this impression that because you're a nonprofit, it means you don't have the financial discipline, right? And so, I think of even this, this past year, enormous amount of economic uncertainty, right? Just in terms of the current environment. And so for us, that really is this idea of saying, okay, well, just because we are in the nonprofit space, we can't forget that cash is king, right? And so at the end of the day, liquidity is kind of how my mindset works a little bit. But then I think, rewind the clock to last year on that same theme, we spent a lot of time rebalancing our capital structure. We upsized our line of credit. We're always focused on, hey, how are we doing in terms of diversifying our revenue, right? So really, these past 12 to 15 months was all about financial flexibility. And so with that, to your point, how do you think about the trade-offs? So, when you think about ROIs, yes, it's not in the land of necessarily IRRs and yields and returns. This idea that says, hey, again, back to the impact. If we're going to make this type of investment, what is the impact that's going to yield on the back end? And so again, because we're not trying to focus on building up a war chest necessarily, it's this idea of like, hey, we're going to take in some cash, take in some revenue. How do we deploy that back in terms of our mission and support our explorers?
So it's all about cash still. You still have to worry about cash as a nonprofit CFO. Good to know.
Yes. Well, and especially, for those in the nonprofit space, they realize that the accounting is slightly different, right? There's different revenue recognition rules that you have to abide by. And so sometimes when you look at a P&L, it's going to look a little different than you do on your cash flow. So that's why I automatically go right to the cash flow at first and then work backwards.
Back to cash.
Back to cash.
Back to cash.
Darien, I really like what you said around fundraising. I think it's just sparked like a couple of questions in mind. But if you look at the CFO in a traditional company, you're always focused on like getting into predictability, knowing where you're going in terms of revenues, cash in, etc. From the outside, you might feel that like because you're a nonprofit, like it's less predictable. But what you're saying is that I guess part of your job is about making it predictable. Is that the case? Like how do you work with this fundraising team to maybe get it more predictable than what it looks from the outside? And what is the work there in terms of getting the cash into the business and making sure that you have the right visibility there?
It's great, right? Because I think it all starts from this idea of you have to make decisions along the way with imperfect information. So that I think is kind of your going in assumption. This year and even probably the tail end of last year, we're starting to spend a lot more time in terms of how well are we doing at forecasting, right? And I say that only because up until, before our current CEO came on board and our current head of advancement, the culture of philanthropy really wasn't what it is today, right? Today we have a full machine that is firing on all cylinders, but that has been over probably the last 4 years versus our 138-year history. So now we're in this mode now that says, hey, we are now collecting a lot of data. And so how do we now use that data? So as an example, when we look at the advancement coming out of the budget season this past year, it's really going through layers and saying, okay, well, how much cash do we have? What are we projecting next year? How much of that is restricted, right? It's restricted to a particular program or project. How much of that is unrestricted? And then what do we think about, obviously, the lumpy, one-time gifts? And if we go back in time and start mapping that out, can we look for patterns? It's kind of really what you're doing, right? Back to this whole question around uncertainty. It's really looking for patterns. And does that make us a little bit smarter in terms of how we manage cash and also how do we deploy the capital?
Super interesting. I'm curious, again, this transition, I think, to us is really fascinating because you've had so much experience as a traditional CFO of for-profit companies and then moving into a nonprofit one. As you made that transition, did you notice any skill sets from your for-profit life that particularly came in handy? Did you notice you had certain advantages from other roles that you'd had in the past that you think really served the nonprofit space you're now in?
Oh, when I think about that question, over the 30 years plus now, I've really tried to build a toolbox that is anchored in accounting, finance. You have the other part of the triangle that is strategy. And then I would say the third corner is operations. Right. And so this idea of like, how do you bring all three of those together as a triangle? And I think one of the things, and actually I'll say two things. One is when you take that toolbox, I really try from a tactical perspective when I go into meetings to really put, the role, if you will, aside and really think about, okay, you have to, Darien, think beyond just your function. And when we're sitting in a meeting and we're coming up to certain decisions and hearing kind of the output, wow, what are the potential impacts that's going to have to the entire organization? What may be the interdependencies, if you will, right, of other divisions? And then you get into, okay, now what does that mean from a financial perspective? So I think that's kind of the lens, if you will, or lenses that I try and bring to the table, just in terms of, the toolbox and the skill set, right? But then I think number two is overwhelmingly is leveraging empathy, right? And I think that as you progress in your career, whether that is you're in year 2, year 35, year 40, I really strongly believe in just coming to the table with empathy. So as I speak with our teams across the entire organization, staff, regardless of level, treating folks as humans, right? Like, hey, how is the family? How's your brother? What's happening here? Hey, I heard so-and-so was in the hospital. I really lean into that, quite frankly, on a day-to-day basis. And so I think if you bring that skill set, the triangle, if you will, and you bring that empathy, that's going to help you, really serve you well.
I love both of those points. One of the things when you were talking about the triangle that really resonated for me was this idea of You said I kind of toss out my role and I think about the impact to the business first. I think that's such a key insight for CFOs, especially when we grow up in more of like a true finance with a capital F function. We can really have that lens of like just the finance aspects of a given situation. But as a leader, you really need to be thinking about the whole company.
Yes.
I love that. That was a soundbite.
That reminds me of a great episode about EQ and IQ.
Yeah,
which
that's right.
is really, really good.
Yeah.
We'll put it in the notes.
Yeah.
Darien, just one additional question on this kind of like scope that you covered today. One thing that is particular on your role is that you're both CFO and COO.
Yeah.
Can you tell us a little more about the COO role in a nonprofit organization?
It's interesting, right? Because, as I was taking the role now close to 2 years ago, it dawned on me that you're starting to see this a lot more and more, especially in the nonprofit space. So I have counterparts who are over at, muscular dystrophy, as an example. Counterparts who are over at Colonial Williamsburg, who kind of wear both hats, right? And you're now starting to see it much more on the, for-profit side as well. I think recently I was reading Salesforce now has a chief operating in the same role. Same thing for PayPal. And so, when I look at it, going back to this idea of how do you, divorce yourself from your role, our CEO, Jill Tiefenthaler, is a strong CEO. She sets the vision, serves as the face, if you will, of the company, right? And sets the tone. And so when I think of, my day-to-day, yes, there's a financial aspect, but to your question, Alex, around the operating side, it comes down to, efficiencies, right? So are we operating efficiently? Do we always have kind of this lens towards accelerating growth, as an example? And a lot of that comes with just making sure that, is there alignment across the organization towards we're marching to the same drum, right? So this idea that says, hey, let's see if we can break down those walls, break down those silos. And as an example, we sat around the table last year and last fall around our budget season, taking some time out to understand, okay, for each one around the table in our senior leadership team, what are your priorities going into 2026? Let's sit around the table and everyone go through that so we can hear that at once at the same time. And then if you're sitting across the table and someone says, wow, I'm really heavily dependent on technology to pull through this initiative that I have, wow, I want the technology to say, you know what? I didn't realize that was in your top 5 priorities. Hey, we need to have a talk offline in terms of how I can support you. Or, wow, I've already got that covered. It's number 2 on my list as well. And so I think, back to your original question, Alex, of just how do we make sure that alignment is there, especially at the senior leadership team.
Do you ever, with both of those titles, it's funny, I've also been a CFO, COO myself. I think it's becoming more common, as you say. Do you ever feel like those two roles for you end up at odds, or that you're having to kind of do a multiple personality situation? When do you feel like you are really balancing the two roles, maybe making certain kinds of decisions or with certain kinds of meetings? When does that come up, if ever?
Well, I'll address it this way. First and foremost, this allows us to have one less head count. So I'll say that. No, I'm kidding. I'm kidding. But I think it goes back to my earlier comment around how do you just take off the hat, so to speak. So then when you walk into the meeting, you're thinking about the entire enterprise. Now, with that said, there's the tactical, right, to your point that says, okay, we may be looking to make an investment in a new program. We may be looking to invest in a new technology system. Hey, by the way, we need 10 more staff to basically pull through, program X, Y, and Z. So those come up on a daily basis. We have no, full stop. And so then it becomes, you're right, Lauren, it's this idea of like, okay, how do we judge that and think about, there isn't an ROI discussion, right?
Yeah.
But it goes back to this idea that, hey, what does this do, regardless of which investment we're talking about, staff, technology, processes, what does that investment do to pulling through and driving the mission? And so if it checks that box, then it becomes, okay, how do we make this work, right? And because it may be a case where, yes, there's not, cash, does not just grow on trees. And so this idea that says, hey, you have to be smart with your cash. So how do you be selective about those investments you place? But again, mission is going to drive you with that.
So much sense.
Yeah, super interesting. One thing that I noticed earlier, Darien, is you talked a lot about efficiency, and maybe from the outside world, and I was thinking about nonprofit, maybe you think that like if you're in a nonprofit, maybe efficiency is not necessarily like the first top priority when you think about it, because it's money that is from, donations and charities and stuff, this is even more important. But the question that I have for you is that, of course, if you're a publicly traded company, everyone is going to scrutinize your 10K and just look at like every single ROI indicator and stuff. What is the framework for you working in a nonprofit in terms of efficiency? How do you set that right? And what are the guardrails that you put in place? And what is the general thinking around that, around making sure that you use the money properly?
Yeah, I think a lot of times, Alex, for us, it comes down to, at our core, we provide grants to our explorers, right? And they're the ones that are out there basically trying to save the planet. And so when you think about the day-to-day, there are several operational processes, if you will, in terms of how we get that done. And so a lot of times it may be as simple as, hey, in basically our update meetings, whether it's weekly, every other week, what's going well, what's not going well, right? And so you're trying to get this idea that says, hey, are there areas of improvements? And again, it could be small tweaks. It doesn't have to be something that is transformational, reinventing the wheel. So that it starts there, and just making sure that, hey, do we have our finger on the pulse in terms of what's happening on a day-to-day? But then you're right, at a certain point, and we're working through this now, where you say, hey, how do we get better at, looking at and identifying those metrics that really help us understand, hey, how well are we performing, right? And something as simple as, hey, we know that basically we rely on contributions, our donors, our supporters, our partners, really to drive our revenue stream, right? To then deploy back to explorers. Well, at the end of the day, how do we keep track in terms of which ones are basically, bringing in revenue or not? And how do we know which ones we may need to turn our attention to basically amplify more so that we can say, hey, let's raise awareness on this project. It doesn't seem like folks know about this. This is important. So I think it all stems from that perspective of understanding, hey, what's working well, what's not working so well, and then can you supplement that with metrics and reporting to then say, okay, how do we go about making decisions?
Yeah, I can definitely see the COO role in this, in what you just said. How is the company organized in terms of governance? Is there the equivalent of a board where you report on a regular basis? Like, what's the governance?
Yes, we are a private organization, right? And so, and all of our funding basically comes in from donors, supporters, if you will. We do have an independent board, which is over 20 now, and we basically get together every quarter. So we have quarterly board meetings, just as you would expect. And essentially, it's kind of a 2-day exercise, right? Where you basically have day one could be as much as 4 to 5 committee meetings, right? So you'll have audit committee, finance committee, investment committee, etc. And then typically day two is anywhere from a 3 to 4 hour session as a full board, essentially.
Now for a quick break for a word from our sponsor.
The hypergrowth era is over. This is the age of profitable, sustainable growth. Remember a few years back when securing investment seemed so easy? Today, not so much. Interest rates are up, valuations are down, money is scarce, and it doesn't come cheap. You need to stand on your own 2 feet. A grow-at-all-costs mindset simply isn't viable in the current market. Today's top priority for businesses is to optimize the customer experience to maximize lifetime value and retention. Marketing, sales, and success have seen decades of investment in the art of optimizing the customer experience. It's time for finance to catch up, to push for the same level of sophistication as the other disciplines, to ensure the finance touchpoints become positive elements of the customer experience. It's time for financial relationship management. This is your CRM for customer engagement through the finance process. Finance have long been under pressure to collect invoices, but not able to focus on the customers those invoices represent. With FRM by Upflow, you can bring the B2C customer experience to your B2B finance process. We've taken a completely new, customer-centric approach that'll set your business free. In fact, we are so confident that we underwrite the value of FRM difference through our unique money-back guarantee. If Upflow doesn't deliver at least double its cost in savings, you get all your money back, no questions asked. Faster payments, better customer relationships, and fully realized growth potential. It's time your finance function embraced the change.
Darien, we know that like one thing that is extremely important, a significant project at the moment is the museum. Can you tell us a little more about what's in it, and then your role as a CFO and COO in this like giant project for the society?
It's a small project.
It's a small project.
I heard it's actually physically gigantic. So
It is. I mean, essentially, and I don't know if either of you have been, in DC lately, but we sit on 17th and M, right, is kind of our campus. And so essentially what we did about 4 years ago was blow out the entire center part of the block, which we own. And so now we have built, our previous museum was about 20 to 25,000 square feet of, public space, right, museum, retail, etc. And this new space is now going to be over 4 times that. So it is over 110,000 square feet. And expands essentially, underneath all of our base camp, headquarter buildings. The society, again, we were founded in 1888, so over 138 years now of history. We have buildings on the campus that date back to the early 1900s, but this is truly transformational. And we are looking at this Museum of Exploration. We call it the MO for short, MOE. But the goal here is really to, when folks come through the MO, is we want them to feel like, hey, everyone can be an explorer, right? So that's first and foremost. And then second is really, how do we make sure that people come away with, hey, I can have a positive impact on the planet. And so those are the two things. And it really allows us to amplify an enormous amount of work that's going on globally by our explorers and really house that all in one space, right? So we have cutting edge interactive exhibits. We have a courtyard with biospheres. There'll be a nighttime show, if you will, in the courtyard. We've got multiple galleries, a digital magazine wall where you can pull up, dates of the magazine cover on a specific date, eatery, retail. And so it's been pretty phenomenal. And I will say this to give a plug to our staff, because they have been working around the clock on this. We broke ground back in 2022. So some folks have been working on this 4+ years. And we're collaborating all over, right? Because we're trying to hire over 100 staff, right, to our base camp. We're developing content. We're working with explorers to highlight their work on the planet. We're integrating systems. We're coming up with new reporting and new dashboards. I mean, so it is a all hands on deck. And we open this summer, so summer of 2026.
that's so exciting. I feel like, Alex, we may need to take a Growth-Minded CFO field trip down to DC.
Because we're explorers.
I look forward to hosting you, yes.
So that is so cool. What a good project. I'm also very curious because you've mentioned that you got into mission work because you had a bit of experience doing mission-driven work kind of on the side in your previous roles. Now that this mission is your full-time job, do you still have other missions and passions outside of this work that you are pushing forward and passionate about?
Oh, yes. Well, from a personal standpoint, I'll start with the fact that I'm a husband, I am a dad, I'm a son, right? So first and foremost, born and raised in New York City. And with that, I am still a fan of the New York Football Giants, if you could believe. And so, it's been a tough few years.
That is a mission.
But it's a mission. It's a mission. But we have a new coach, and so we'll see what that has in store for us. But first and foremost, my wife and I have been married over 25 years. We have 2 kids, and we love, as a family, doing just live events, right? So concerts, sporting events, comedy shows, you name it. But I also sit as a board director for the mental health organization NAMI. And so they're based right here in Arlington, Virginia, and they are doing amazing work in terms of just advocacy, peer-to-peer counseling, if you will, and just this idea that, I think coming out of the pandemic, we all saw that, hey, pull the covers back. And, there is a mental health crisis, full stop. There's no other way to say it. And so, that is something that I do, outside of work, that I'm really passionate about.
That's amazing.
That's very inspiring. Maybe Darien, before we close that episode, we're always thinking about the audience that is actually growing, of finance leaders and aspiring CFOs. If there was one thing like out of your career that you want to share with someone that is starting their career in finance, what would be that piece of advice?
I'll say two things, Alex, to that. One is when you are given an analysis, sometimes we work, and I did this myself younger in the career, we work so fast to basically turn around the analysis just to get it done. It says, hey, I'm the quickest one to deliver results and deliver output. And I always tell folks, especially as they're just starting their careers, when you finish that analysis, take a time out, take a look at that analysis and say, what does this tell you? So that when you deliver that, you can say, hey, I've done this analysis. Here are the 2 or 3 headlines as a result of this, and maybe some things we should consider, as opposed to just, if I can just get it out in 5 minutes and turn it around, I'm done. And that's end of story. So I think that is always one thing I've tried to impart to, a younger generation. And then 2, I would say, is this idea of speak up in every room that you enter, right? So this idea that says, as you advance further and further in your career, folks want to know what is your point of view, and you will find that the more you share your point of view, you will get invited to more rooms.
Those are great.
Yeah, great piece of advice. I think one of the things that we had across every single episode was about going into different rooms. Just making sure that you just spend time with teams that you not necessarily would spend time with naturally, but trying to understand what they do. Being in their shoes as well, just trying to understand the day-to-day. We had so many CFOs sharing that. And
That's right. And I think this is building on that, because I think that the great point that Darien's making is when you were saying people want to know your opinion in those rooms. It's kind of a second step, that it's not enough just to be in the room. You really have to be present in the room and voice your opinion, make your voice heard. And I completely agree. It's life-changing for your career to be comfortable doing that.
It really is.
Darien, thanks so much for such an inspiring episode today.
This has been
it was
so
great to have you on the show.
Thank you for having me. I really enjoyed this.
So we'll wrap it up there with our episode of the Growth-Minded CFO. Again, I'm Lauren Pearl, and this is my fabulous co-host, Alex Louisy. If you enjoyed today's episode with Darien, which we both very much did, you can watch our other podcasts. Like this episode, subscribe to hear more podcasts as they come up. And if you are a CFO or know a CFO who would be another great guest for the show, please, you can go on our website and apply to be our next guest. We would love to speak with you on the next episode of the Growth-Minded CFO. Until then, we will see you next time.
See you next time. Thanks, everyone. Thanks, Darien.
Thanks so much.
Bye-bye.
Bye.
Thanks for tuning in to today's episode of the Growth-Minded CFO podcast. If you enjoyed it, please subscribe and consider telling a friend or colleague about the show. We'd really appreciate your help in spreading the word. The Growth-Minded CFO is brought to you by Upflow. Upflow is a groundbreaking financial relationship management software. Think of it like a CRM for finance. Upflow enables businesses like yours to collect cash faster, build stronger customer relationships, and achieve efficient long-term growth. Join thousands of forward-thinking finance leaders and go from chasing invoices to engaging customers. Find out more at upflow.io.